What if a war on the other side of the world could affect your mortgage, your home value, and Alberta's real estate market? It sounds extreme, but that is exactly what could happen. With growing conflict involving Iran, oil prices have already started reacting. And here in Alberta, whenever oil moves, our economy, housing market, and government finances can move with it. So the big question is this: will the Iran war be good or bad for Alberta real estate? The answer is both. In this video, I'm going to break down how this conflict could affect oil prices, what that could mean for Alberta's economy, how it may impact Edmonton and Alberta real estate, and what buyers, sellers, and investors need to watch over the next 6 to 18 months. Hi, I'm Serge Bourgoin with findmyhouse.ca and eXp Realty, helping buyers and sellers in Edmonton and surrounding areas since 1985. If you want market updates that actually explain what's happening and what it means for you, make sure you like, subscribe, and hit the notification bell. Let's get into it. The biggest reason this matters to Alberta is simple: oil prices. Whenever there is war or instability in the Middle East, global oil markets tend to react quickly. That's because the region plays a major role in world energy supply, and any threat to production or shipping can cause prices to rise. One of the biggest concerns right now is the Strait of Hormuz, which is one of the most important oil shipping routes in the world. If conflict disrupts supply, oil prices can spike, and for Alberta, that matters a lot. Our province is highly sensitive to oil prices. When oil goes up, Alberta's government revenues often improve, energy companies become more profitable, and confidence across the province can rise. That can help support jobs, wages, investment, and consumer confidence. And all of those things can feed into the housing market. Before this conflict became a major concern, Alberta's housing market was already expected to have a fairly balanced year. The general outlook for 2026 was for a softer landing. That means modest price growth, more balanced inventory, and continued migration into Alberta. And Edmonton in particular was expected to stay one of the most affordable major cities in Canada. That is a big deal. Because while many major Canadian markets are still struggling with affordability, Edmonton continues to stand out for value, livability, and in many cases, better cash flow potential for investors. So Alberta was already coming into 2026 from a position of relative strength. Now the Iran conflict adds a new layer to that outlook. Let's start with the positive side. If the conflict pushes oil prices higher, Alberta could benefit economically. Higher oil prices can lead to more activity in the energy sector, stronger business confidence, and possibly more hiring and investment. When people feel secure in their jobs and income, housing demand tends to hold up better. And when Alberta looks strong, that encourages more interprovincial migration. That means more people moving to Alberta from higher cost markets like Ontario and British Columbia, looking for affordability and opportunity. So in that environment, cities like Edmonton and Calgary could continue to see steady housing demand. This is especially true in Edmonton, where affordability remains a major advantage. So yes, there is a real case to be made that higher oil prices could provide support for Alberta real estate. But now let's talk about the other side. What helps Alberta through oil prices can also create problems. Because when oil prices rise, so do fuel costs, transportation costs, and often inflation more broadly. That matters because of interest rates. If inflation stays high, the Bank of Canada may be more cautious about cutting interest rates, and that means mortgage rates could stay higher for longer. That creates pressure on affordability. Even if Alberta's economy gets a boost, some buyers may still hold back because borrowing costs remain too high. There's another risk too: global recession risk. If the conflict becomes prolonged, it could trigger a broader economic slowdown, and Alberta may not be fully insulated. So this is not a simple story where higher oil automatically means a booming housing market. It could help in some ways while hurting in others. So what happens next? Let's break this down into 3 possible scenarios. Scenario 1, a short, contained conflict. Alberta stays close to its original path: modest price growth, stable demand, and continued migration from more expensive provinces. Scenario 2, a prolonged and disruptive conflict. Alberta could see stronger momentum, but inflation could also remain elevated, keeping mortgage rates higher. In that scenario, some parts of the market may perform better than others. Energy-linked communities may stay strong, while more rate-sensitive buyers pause. Scenario 3, A severe global downturn. Housing demand could weaken across Canada. Even if Alberta outperforms others due to oil and affordability, demand could still soften. If you are a buyer, this market may still offer opportunity. Edmonton remains affordable and conditions are balanced. But you need to pay close attention to mortgage strategy. Even if Alberta's economy improves, your monthly payment is still going to depend heavily on rates. So buyers need to watch oil prices, inflation trends, Bank of Canada decisions, and local inventory. This is a market where being informed matters more than ever. If you are a seller, Alberta's economic backdrop could remain supportive, especially if oil stays high and confidence improves. But don't assume anything will sell for any price. Presentation matters, pricing matters, marketing matters. You still need a strategy to stand out. For investors, Edmonton continues to be attractive for relative affordability and cash flow potential. If Alberta remains resilient and migration continues, Edmonton could remain very attractive. But the key is buying the right property in the right area at the right numbers. So what is the bottom line? The Iran war is not simply good or bad for Alberta real estate. Higher oil prices could make Alberta more resilient, but they also raise inflation, mortgage, and recession risks. Alberta could still perform well, but the market may remain uneven. For Edmonton, the story is still one of relative affordability, balance, and resilience. And that may be exactly why so many buyers and investors continue to watch this market closely. If you're thinking about buying, selling, or investing and want help understanding how economic changes affect your decisions, reach out to me directly. I'd be happy to help. If you found this helpful, like and subscribe, and let me know in the comments, do you think higher oil prices will help Alberta real estate, or do you think inflation will create more caution? Thanks for watching, and I'll see you in the next video.